US dollar index opened today after a downward gap and it was trying to recover, but then came some statement from China. You can read the statement. China says US undermines consensus reached in Geneva talks. China asks US to correct wrongdoings. China issues a statement on US existing chip export controls. So these two tweets, you can say zero has is a good source of information, immediate information. So it looks like the China-US tension related to the tariff and related to this trade war is not coming down so soon and so easily, despite they agreed for a cooling period of 90 days. So what I have here to share with you is a USD JPY trading plan. But if this trade war things or if such kind of statements will keep coming, it will keep pressurizing the US dollar. For example, if I go to the 1 hour time frame, you can already see it started with a gap, was going down already, and then it started recovering a little bit in European session, and then you can see these two candles. I'm talking about these two candles. I will use cross here to show this. These two candles were made when the statement from China came. So there are chances that the US dollar will recover because previous week was already bad for US dollar because of poorer than expected CPI, PPI, and Moody also downgraded United States to from AAA to A1 rating. So uh, that's why you can see the movement to the downside last week, entire 5 days. I mean, last 4 days of the previous week and today is bearish. But this is the time when it can probably bounce to the upside and it can probably make a pattern like three drive. So what I'm saying here is this will be the first drive retracement, second drive retracement, and this can be a third drive, which will lead it to 149.79 area, or it can even go to 150, which is a psychological level. But we have to be careful in this bullish approach because this will only happen if there will be no negative influencing factor. If we look at any calendar, so uh, there is nothing much on calendar other than some PMIs coming from the US this week. However, anything related to trade war, anything coming from China will not only create trouble for US dollar, but also for Chinese yuan. So we, of course, are not trading Chinese yuan. We are trading US dollar. So the setup which we are talking about in USD JPY can be traded with very with absolute caution. So what we are going to see, what we want to see today to take my buy position is we don't want USD JPY to break below the today's low, and if it continues like that, there are chances that it can continue to the upside. Why I'm bullish is not just based on the three type pattern which I have shown you. What I'm trying to show you here is that the entire things, whatever negative came in the market, that all of those things have already been priced in. So upward movement is going to be natural because if you look at the magnitude of previous bulls, the bullish swing to the upside was much bigger than the bearish move. So bearish move still seems to be a retracement, and the whole development from downside to the upside is looking like a three drive. So that's why, despite all, I mean, that's why we can still be optimistic that this pattern can be completed, and that's why we can trade this under formation pattern, uh, and we can see that the market has been not acting uh, so much bearish on the bearish news, like the poorer CPI or PPI or the Moody's downgrade. Uh, so otherwise, if market was so bearish, it should have taken this low. For example, market should have gone down and should have taken this low and should have gone to the downside. But despite all those things in the last week, the movement to the downside is pretty small compared to the previous upswing, which shows that the reaction to the bearish side is not strong enough, irrespective of the factors which we saw recently. So that's why we probably can take a risk and take this trade. And we do not want market closing below this low. I'm talking about this low. All right. So that's all in this plan. And thanks for watching.